Right, good afternoon then everyone, as we are at the beginning of another week of trading on Monday the 12th of February. We'll have a flick across the calendar and see what to expect over the course of this week on a relatively quiet beginning to the week. Monday today, not too much to go through, and as resulted in some pretty quiet markets to begin the week. You can see the US dollar, you look at your Aussie Kiwi, kind of a bit all over the place. Slight bit of downside at the open this morning on euro and a bit of sterling, a bit of upside on dollar Swiss. Nothing major really, just a bit of a chop kind of no matter where you look in today's session so far. You can have a look at stock indexes across the board to begin the week. The S&P, the Dow Jones, the Nasdaq, the Russell not doing too much. European stocks not doing too much. Asian stocks, with it being Chinese New Year this week, you're not likely to see too much action in the Asian session over the course of this week. And bond markets relatively sideways, oil sideways. Gold, if you go back to gold, I don't know why that is not on, but if we have a look at gold here, again, not too much to see there on gold. So a relatively quiet start to the week. Quiet Asian session has followed into a quiet European session, as likely to remain the case. Probably, again, I say probably, markets have a funny way of working sometimes, but with there being inflation prints tomorrow out of the US, maybe you see some kind of position squaring in equities in today's session, but main hit, big hitter of this week, sorry, is inflation out of the US. Tomorrow you've got all of them. You got the headline figure, you got core CPI, and core CPI year over year expected to drop. Headline figure year over year expected to drop is still a little bit too high for the central bank. It's not quite where they wanted to. They still wanted to come down. Are we likely to see it come down at the pace that they want, or stronger than the pace that they expect? That remains to be seen. Consensus 2.9 for headline figure, for the core year over year 3.7. Again, both of them still a little bit too high in the US. So that will be the main focus of attention tomorrow. Now, you've got economic data across the board in the US remain strong. Markets like that, stock indexes like that. The US dollar, the US dollar kind of higher for longer narrative. The US dollar likes that as well. So kind of US assets across the board, stock indexes, currency, yields, all being somewhat supported off the back of economic data remaining resilient. Inflation is still somewhat sticky, but if you take inflation out of the equation, growth is still strong. The labor market is still strong. Household net worth in the US is the highest it's ever been. Manufacturing is still strong. Consumer spending is still strong. The services sector is still strong. All these different data prints throughout the US economy are still positive, right? If those can remain positive and inflation can come down further than what is expected, surely that's the green light ahead for stocks to continue to rally. If these beat consensus and comes in higher than consensus, I think that's where it gets a little bit tricky, but I think markets will probably just brush that off. If these beat consensus, that is a pretty easy trade higher in the dollar. You've got all these other economic data prints higher, which means that the Fed will use higher for longer. Again, it's pretty loose terms, but we can use those terms for now. If inflation continues to be sticky and it rises slightly, that just should be just an easy long on the dollar. That might get a little bit tricky for stock indexes, right? But if this misses consensus again, that might get a little bit trickier for the dollar, but should be good for stock indexes, right? As it will probably increase chances of a rate cut, certainly from a market's point of view. So I do think there's tradable opportunities off the back of this, right? One of them is long dollars, one of them is long stock indexes. Whatever scenario pans out, I do think one of those assets are probably better suited to your trade. If these beat consensus and come in above consensus, it is probably an easier trade long on the dollar. If these miss consensus, it is probably an easier trade long on stock indexes. So just keep that in mind once you come around to tomorrow. Beats on consensus, long dollars. Misses on consensus, long stocks. We'll keep that in mind as we come around to tomorrow, and we'll see where we end up come the end of the week. Retail sales then on Thursday out of the US. Consensus is minus 0.1%. That'll be an interesting print when we get around to it on Thursday, but we've got to get through inflation first, so I'm not going to speak too much on that for now. Economic data from the UK, you've got a raft of economic data from the UK. The unemployment rate expected to tick up slightly, inflation expected to tick up slightly, GDP, minus 0.1 for quarter over quarter. That is the preliminary figure. GDP, year over year, 0.1%. But this inflation print is, I think, the key when it comes to sterling. Now, consensus is for this to tick higher from the previous month, so 4% into 4.2%. If I just get this down to the medium impact data release, you come down, you can have a look at inflation month over month for January, minus 0.3%, core CPI 5.2%. So these two prints here are still far too high for the Bank of England. Inflation rate, it might be a bit kind of difficult to work out as to why to be kind of up on previous in the year over year, down on previous in the month over month, but that is just in relation to the year to a year ago. The year over year print month is month over month, right? Inflation from the previous month into this current month. So inflation is still too high in the UK. Beats on consensus here means that the Bank of England, they've already pushed, markets have already pushed rate cut bets back from July into August, or from June, should I say, into August. So market pricing for interest rate cuts from the Bank of England sit in August, right? But if inflation continues to be sticky, it just reduces the need for interest rate cuts. The economy might require interest rate cuts, but if inflation is too high, the Bank of England can't really go and cut interest rates. So I'd probably say long dollars and long sterling is kind of how I feel this week should probably pan out, right? Well, that's the hopeful way of how this week should pan out for me personally, right? In terms of the currencies, where it gets a little bit tricky for the UK side of things, if you start missing consensus. So, personally, I'm going to sit there. I'm going to hope for beats and consensus. What I hope for never really pans out at most of the time, but we'll cross that bridge when it comes to it a little bit later on in the week. Valentine's Day, is it likely to cause a little bit quiet markets? I don't know. We'll see. But yeah, I mean, the ideal scenario for that, for long sterling, which I do have a bias, long sterling would be for beats and consensus. Maybe a print in the opposite direction kind of disputes that. But first, we got to get through inflation tomorrow from the US. That's the main trading, main opportunity for trading this week. US inflation prints, beats on consensus, long dollars, misses on consensus, long stocks. And I do think you get a trade either way. Having said that, probably comes in bang in line with consensus and we get nothing. But again, we'll hope that doesn't happen. We'll hope we get a beat or a miss either direction, and we'll update further as we get on to that throughout the rest of the week. I'm not going to speak too much about kind of Wednesday, Thursday, Friday, as we do need to focus on CPI from the US tomorrow. Main focus of attention this week, should I say. Let's see if we can get some tradable opportunities out of it.